Hey everybody, welcome to my channel. My name is Justin. Thank you so much for joining me today. Today I want to talk about bank valuations. What is the proper way to value a bank? If you watch my other videos when I do a stock analysis and I go into how to value a company, I usually show you three different types of methods that I use. One of those is a margin of safety. And basically I'm taking the earnings per share of the last 12 months. I'm looking at a projected growth rate over the next 5 years. I'm looking at the historical PE for that company, and then I'm projecting out what the stock is going to be in 5 years, and then discounting that back to today's rate at a margin of safety. The second one that I look at is a 10 cap valuation method. So essentially that looks at the free cash flow over the last 12 months and then looks at how many shares are on the books right now. And then from there I can determine, okay, how much is the company worth based on the free cash flow on those shares. And then the third one I look at is a payback method. So how many years does it take for me to get my money back once I buy into a company? And all three of those work well depending on the company, but none of those work really well when you look at a bank and try to value what it's worth today. So I want to show you how to do that properly, and it's called a price to book value. So I'm going to teach you how to calculate the price to book value in this video, and I'm going to walk you through an example for JP Morgan, and then we're going to compare it against Bank of America and then also Wells Fargo, and then from there we'll see what that price to book value is. Then we'll look at those ratios, and then we'll have some more discussion from there. So guys, if you get some value out of this, please smash the thumbs up button. It really helps the channel, pushes this video. I super appreciate it. And if this is content that you enjoy, I encourage you to subscribe to this channel. All I do is talk about stocks and the stock market and hopefully educate and help you guys grow as investors, and we are in this together. So let's jump right into this. So price to book value, what is it? Well, essentially it's looking at the market cap of a bank and comparing it against the net assets of the company. Net assets are essentially total assets and then subtracting out total liabilities. And the reason why this is such a good valuation method to use is that banks are required to maintain a core capital adequacy per the Basel regulation. So that's one of the main reasons to look at that. It also can help you figure out potentially if there's maybe a bank that's undervalued that has a bunch of net assets on their book, that the banks may be able to use those net assets to drive greater profitability into the future. Another reason why you want to look at price to book value for banks is banks are different than all the other industries. Macroeconomics, as far as inflation, interest rates, are all huge drivers to potential profitability. So net assets kind of remove some of those other factors, so you're kind of zoning in and looking at one thing, creating a really good benchmark across the board for bank valuations. All right, so how do you find price to book value? It's really simple. All you do is take total assets on the books, you subtract out total liabilities, so you get what we call net assets. Then from there you go and find out what the outstanding shares are on the books, and then you take that net assets, you divide it by the shares, and then you get book value. And then once you have the book value, you go find out what the stock price is, and it's as simple as dividing the stock price by the book value, and voila, you have the ratio we're looking for. So let's go walk through an example right now so I can show you exactly what to do. All right, so I'm on my Charles Schwab account right now. You could go use Yahoo Finance. You could really use anywhere. It's pretty easy to find this information. So what you want to do is you want to go to the balance sheet and you want to go to the last quarter. Don't go to the last year, because depending on when their fiscal year end, it could be March, it could be September, it could be June, you never know. So you want to go to the last quarter. So today's date is May 15th, 2021. So the last quarterly earnings for JP Morgan is March 31st. So fairly recent, which is great. So what we want to do is we want to go down to total assets right now. So that's what we're doing. So total assets on the books is $3 billion. So it's $3,689,336,000. So we want to go plug that in right now, which will be right here. Keep in mind, look at the currency, and is it in thousands, is it in millions? Just make sure you're consistent all the way through, or your ratios are going to get kind of thrown off. But just know that this is a $3 billion number, $3 billion number, that is. All right, so the next thing we want to do is go look at total liabilities and plug that in. So let's go down to that. So all right, so total liabilities is $3,408,622,000. So we'll go plug that number in here. There we go. And just kind of a tidbit of knowledge. Balance sheets is basically a snapshot in time. And how it works is assets equals liabilities minus owner's equity. And I'm an accountant. That's what I do as my day job. So I'm trying to bring value to you guys as an accountant, and kind of from my background and that sort of thing. So, all right, so we have that. So now we have total assets. So again, all you have to do is total assets minus total liabilities to get your net asset number. So right now we have $280 million for JP Morgan. Now we need to go find out the shares outstanding. You could do this a number of different ways. A lot of websites, you go just to like the company's profile. You could go to their 10K or their 10Q to go find out. What I usually do is just go to the balance sheet. So if you scroll down to the balance sheet, there should be a total common shares outstanding number for you, and you want to go grab that. So they have about 3 million shares, it looks like. So if we go plug that in here, there we go. So at this point, we have what we need to calculate book value. So basically what you need to do is you take net assets, which we already figured out, which is that $380 million number, and then you divide it by shares outstanding. And so from there, let me just unhide that. We have $93. So that is the book value of this company. Now there's also like a tangible book value, which is a little different, which I'm not going to go into in this one. So just know that book value, tangible value looks at a little bit different things. This is just the straight book value. All right, so now we need to go grab the stock price for JP Morgan Chase. That should be really easy. Any kind of website that you go to for Yahoo Finance, CNBC, if you're in your brokerage account, what's going to tell you. So we're on Schwab right now. So $164, we see that right here, is the stock price. All right, so we plug that in. So now we know, or we can determine what price to book value is. So all we have to do is take the stock price, divide it by the book value, and voila, that's what we get right here. So we have a 1.77 price to book value for JP Morgan Chase. So pretty easy, right? So now the best thing to do is go compare it against other companies. So that number alone just doesn't do justice. For me personally, when I'm looking at banks, I try to buy banks that are under book value. For example, my biggest position for about 15 months was Bank OZK. They're a smaller bank. It's around a $3 billion market cap. I ended up buying that company at a 0.6 price to book value, if you can imagine that. Obviously doubled my returns in that stock. So I try to look under $1, but you know, this type of environment right now, in general, stocks are a little bit higher historically than they have been, or a lot of it, depending on who you talk to. So let's go look at two other companies. And again, we'll look at Wells Fargo and look at Bank of America. Those are the other two banks in the United States to compare them against. So I already went and pulled those numbers for you guys. So you'll just have to trust me or go calculate it on your own. It's kind of up to you on that front. So again, JP Morgan Chase was 1.77. Bank of America was 1.32. Wells Fargo was 1.02. So if you're looking at this type of valuation, it's pretty clear that Wells Fargo is the best value right now. Bank of America is second. JP Morgan is the most expensive. And you know, for me, as an investor, I would encourage you to do more digging. Don't just do this valuation, say, oh, it's a no-brainer. Wells Fargo is the bank to buy based on this valuation. You want to ask why and dig in. So there might be a really good reason why Wells Fargo is cheaper than the other ones. And there is a good reason. So I can tell you offhand that Wells Fargo has had a lot of legacy issues. They've been fined by the government. I mean, this stuff goes back years and years. I mean, they really had an unethical management team that was there, creating an environment that was really unhealthy. And basically employees, managers, in order to hit their numbers, they were making up employee accounts. It was terrible. And so once the government found out about this, they hit Wells Fargo pretty hard. So they've had a lot of legacy issues that they've been trying to work on. They've gone through a couple different management teams over the last few years. So there's a lot going on there. So there's different ways you could look at this. You could say, you might look into it and say, hey, these legacy issues that are old, that are behind them, this management team that they brought in about, I guess it's been about 15 to 18 months ago, Charles Schwarf, I'm doing it off the top of my head. I think that's his name. He came from Bank of New York Mellon. Someone might look at that and say, hey, they have the right management team. They're going the right direction. They're trying to actually tailor their company to how JP Morgan is set up right now. So you might say that, or you might say, Wells Fargo, they have such a tainted reputation right now. This legacy stuff is still hanging with them. It's going to be there for a long time. It doesn't make sense to buy into them. So as an investor, that's what your next step is to look into. But that's how you value banks, and it's really good to do a comparison of at least 2 or 3 other banks in the industry, and then do a little digging from there. But that's how you value banks. I hope you got some out of this. My plan is to bring you guys a 10 cap valuation method as well, teach you how to do margin of safety, payback time method. So if those are things you're interested in, throw that down in the comment section. Just trying to bring you guys more value to your investing strategies that are out there. So thank you guys so much for watching. I truly appreciate it. Again, if you got some value out of this, please smash that thumbs up button. It really helps out the channel a lot. And I'll catch you guys on the other side. Take care. God bless.